July was one of the worst months since 2022 for many investors because the sell off in the most widely held stocks in the market right now shed well over 10%. That really seems to be at odds with what's been happening in the market more broadly. Now, in this chart, we're assessing the health of the market via market breadth. It seems that breadth has been improving. The problem that a number of investors are facing currently, or certainly faced in July, was that they were looking at too narrow of a group of stocks. You might recall that we highlighted the circular financing deal last September between NVIDIA, Oracle, and OpenAI. Bloomberg News has now joined the chorus of those questioning these types of arrangements. They cite concerns that NVIDIA, among others, have potentially artificially inflated demand and valuations across the industry. The graphic from that article really takes the cake. The trillion-dollar question is ultimately going to be, does it actually amount to anything? This thirst for risk assets is perhaps being bitterly quenched at this point. SpaceX, as you'll remember, came public in mid-June at a $135 IPO price, just under a $2 trillion valuation. Well, the stock opened for trading publicly at $150, traded up to as high as $225 within 3 trading days. Made it easily one of the 10 largest companies in the world. But it fell by over 50% from that level over the next 28 trading days, putting essentially every investor who purchased the stock from the IPO onward in the hole. Now, curiously, the company following that IPO, they then sought to raise additionally another $25 billion in the bond market. So how can it be that you have so much hype and fanfare around an IPO listing for this company's stock, but the company's bonds that they issue fall into the high yield or junk category? Make that make sense? Very curious.